Ladies and gentlemen, good morning. It's very nice to welcome you all here again at our offices. And thank you for coming at this hour to discuss our presentation of full year results. And we are sitting here in Warsaw. This is information for our webcast viewers in front of buy-side and sell-side analysts from Warsaw. And please let me introduce you to our speakers today, Mr. Marek Woszczyk, company CEO and President of the Board, and Ms. Magdalena Bartoś, CFO of the Group. My name is Jakub Freilich, I'm Head of Investor Relations. Our speakers today will give the presentation of the results, which will be followed by the Q&A session. Then you will be able to ask your questions. Now I'll hand over to Mr. Marek Woszczyk. Mr. President, the floor is yours.
Thank you very much, Kuba. Welcome everybody. It's always a pleasure to have you on board. More or less the same society as I remember as each quarter we meet together. Today we thank you for your time because we can discuss with you our financial and operating results of the 2014. As always at the beginning I will give you the brief overview of development of the company, what has happened in the last year in the big numbers, including our investments, and then I will pass the floor to Magda. She will get you through the more detailed pieces of information on how we behaved during the last year in terms of our financials. So at first, honeycomb as always. Not yet.
Honeycomb.
Yeah, honeycomb. Okay, good. So first, some highlights of our financial year that has already passed. We think that the results that we have published yesterday's night confirm good performance of our company despite of some shifting market conditions that we experienced last year. Namely, the PGE consolidated EBITDA, as you can see, amounted to 8.1 billion zlotys, which is a record, I think. However, cash flows from operations reached 6.3 million zlotys, which is 20% lower than a year ago. But as I said, this is because of the market conditions. But despite the market challenges, we believe that we maintained great returns. So the cash generation from our operations has been offset by non-cash one-off items of 1.7 billion net total value. Those were, among others, mainly the long-term contract compensations, revenues, and carbon allowances, reverse provisions, but also a further provisions for a voluntary leave program we made for the total value of 400 million. So net profit to equity amounted to 3.6 billion, which translates into 1.95 zloty per earning per share. In terms of the dividends, so our current dividend policy comprises distribution of 40 to 50%, and our aim is to keep the dividend within this threshold. So that implies that potential payout is in the range from 78 up to 97 groszy per share. On the capex angle, we all know it well. We started two mega projects, two conventional investments in Opole and Turów. Our renewables portfolio has reached a wind capacity of 319 megawatts, and in the pipeline there is another 218 megawatts. So we expect to have by the end of this year something like 500 megawatts of installed capacity in the wind farms. We also continued last year the large-scale modernization program of the distribution assets of a total almost 900 million zlotys. So from the perspective of operations plan delivery, we are in a place where we expected to be a year ago. Our net output of almost 55 terawatt hours is lower by a little of 2 terawatt hours than last year, but mainly due to overhaul schedule. In the last year, we reached 2% year-on-year growth in the volume of distribution, amounting to 32.5 terawatt hours, and 7% year-on-year increase in sales to end users, which is almost 40 terawatt hours, a little less than 40 terawatt hours. Now let me tell you, as always, about a bit of the microeconomic environment that we went through last year. As you know, the GDP estimates for Poland indicate 3.3 growth of our economy in the last year, which is showing important year-on-year increase, we believe, of the domestic demand and some signals of recovery in the industry sector. Growth of the domestic electricity consumption is also visible, even if a year-on-year domestic dynamics of this consumption is lower due to relatively mild winter last year. Nevertheless, dynamics of the domestic electricity consumption is as we predicted, so this is relatively moderated but still positive. Looking from the price development perspective, we have seen sharp declines of the prices by the beginning of the last year. So this was an effect of mixture of the components, but mainly lower fuel costs as well as increased share of the renewables in the system, pushing of conventional generation out of the merit order. But I said it many times during the last year meetings that regulatory framework has changed. Starting from the beginning of 2014, we discussed widely the so-called coal reserve, operational capacity reserve. So those elements together had a supportive microeconomics effect, allowed for improvement in the prices visibility, prices formation, which we're glad of it. Also, the situation had also an impact on the trade balances, on the trade balance on cross-border connections. However, we need to keep in mind that those connections, physical connections, have relatively limited trading capacity because of different reasons, but still there's a limited trading capacity, and as well as a further increase in terms of the volumes that can be traded is limited. So new capacities changing visibly the picture that we see today are to be available, in my opinion, beyond 2020. And this is according to the grid operator plans in that field. So all that had an effect on the price decoupling from German market. So we need to remember that this market, even though it's close on the map, Polish and German market are significantly different from the driver's perspective, and reliance on energy mix, and having that in mind, we expect that this decoupling will continue, will remain in place in the medium term. In terms of our, let's say, mega projects investments, so both Opole and Turów investments remain in line so far as adopted in the schedule. In terms of Opole, we kicked off Opole project in January last year, you remember that, and so far we met all the milestones according to the schedule of that investment. So in the whole year we realized the sound package of the construction works, advancement of this investment side that we estimate is at 10% today. So in the Q3 last year we completed the excavation for boilers and the turbine halls and started the excavation for cooler tower. And in November we set the foundation stone for the Opole's boilers. This year in February we signed the contract for water treatment plant allocated at the site of Opole to serve both the existing and new realized Opole units. In terms of two-roof project, two-roof project has been initiated with notice to proceed on December 1st last year. So we handed out the construction site to the general contractor. Contract engineer is also chosen by us, and we are looking for starting concrete works on site, so that we are working basically on the project. On January, we already made, January this year, we already made the advanced payment for circa about 10% of the contract, which is, roughly speaking, something like 400 million zlotys. So we continue also our heat and power plant investment in Gorzów, as well as a smaller cogeneration projects that we completed last year, I mean Zgierz and Rzeszów. In terms of the renewable segment, wind farms, so we are also very active in the renewable area after the acquisitions, especially that we made in 2013 and we finalized in the last year. So last May we increased our capacities with Wojciechowo wind farm, which has a capacity of 28 megawatt, and we reached in total 311 megawatts of installed capacity in the wind. Due to expected change in support, I mean there's a law on the renewables, new law expected to come soon, probably. So we are concentrated on delivering on time our current pipeline of projects, mainly Karwice, Lotnisko, Resko 2 and Kisielice before the end of the current year. So these projects, as I already mentioned, will add additional 218 megawatts of installed capacity in our renewables portfolio. Maybe some detail from the last update from our wind farm sites. In January we signed the turnkey contract for construction of Kisielice wind farm and started the physical construction process. The segment, the renewable segment of PGE also comprises the hydro power plants, including pump storage facilities. What is important from the regulatory aspects, regulatory point of view, in December last year we signed a new contract, 4-year contract with the PSE, with the grid operator, for providing capacity to the operator for the years in 2015 up to 2018. And saying that, I'm going to say that it means that we secured the cash flows from our pump storage facilities, in particular from Dychów power plants. As far as ongoing restoration and modernization activities of existing assets are concerned, as expected, our main modernization effort in the year that passed was concentrated, as usual, on the conventional generation. Our existing assets require ongoing care to be highly effective, and we concentrate on that to meet higher and higher environmental requirements. So we are running two important long-term projects at Bełchatów in particular. There is a comprehensive modernization of the units 7 up to 12 to extend their lifetime and boost their efficiency. So last year we finished refurbishment of units 7, 8 and 11. Unit 12 is already in startup run, and in February this year, February 21st, a couple of days has left, it will be connected to national grids, so the whole project will be finished by 2016, we expect. Total budget allocated to the project will reach net 4.7 billion. Another important figure is about the desulfurization installations for Unit 3 up to 12, with a total budget of circa about 162 million in order to lower SO2 emission and to adapt its level to EID regulations requirements. The project will be commissioned during the current year. what refers to Turów. Turów plant will get advanced desulfurization, difficult word actually, installation for units 4 to 6, and new filters will also significantly lower dust emissions. The contract value of the whole project amounts to 500 and more than 500 million zlotys, which includes 240 million from aid funds. Opole and Dolna Odra power plants were modernized to lower NOx emissions and adapt its level to EID requirements. So we also started the construction of over-border line in Bełchatów lignite mine, Szczercew field, to increase the mine extraction capacity to cover lignite needs of Bełchatów power plant. And last but not least is the distribution network. Assuring the grid reliability, this is one of the main objectives of our strategy that we've adopted in the mid of the 2014. Improvement on quality of the dispatch and the performance indicators are a main focus in this business. And the interruption time for the end customers decreased by 11%, and the further decrease in network losses by 0.6 percentage points, reaching the level of 6.3% of the losses. So from the customer service perspective, we are working on improvements as well. New IT tools were implemented to support the billing process. We also created a centralized contact center for our customers last year. The year that passed was the first year of the newly approved investment plan. Over 30,000 of the customers were physically connected to our grid, and even a higher number has started connection procedures. So we spent significant sum of the money on our grid lines and stations. The effect of our new project is circa about 1,700 kilometers of medium and low voltage power lines, an additional 120 of the new high voltage lines that we exploit. Our modernization effort in the last year resulted in almost 2,500 kilometers of refurbished medium and low voltages lines. We also replaced 6,000 of least efficient stations. So that's more or less what I was to say about some general aspects of our business during the last year, and I will pass the floor to Magda.
Thank you, Marek. Hello, everyone. Good to have you here again at our premises. I will now take you through our 2014 financial and operational results, and as Marek said, we'll present to you how we behaved throughout the year in more details. 2014 was indeed a very challenging and difficult year. The situation in the energy market was unstable and uncertain, both in regulatory environment, as we were discussing throughout the year, but also in the market competitive environment. And in that circumstances, we are happy and proud to share with you that PGE's reported EBITDA reached 8.1 billion, a 4% growth year over year when compared to 2014. Excluding one-off transactions, our operating performance actually reflects the market challenges we faced. Recurring EBITDA fell by 22%, driven down by lower wholesale electricity price, retail margin erosions, mild weather, difficult weather conditions in our hydro generation as well, and also regulatory changes impacting our retail profitability, that in particular is cogeneration support. That is in line with our internal expectations. That is also in line with the outlook, with performance outlooks we were sharing with you throughout the year. While our reported EBITDA improved, net profit is down by 8%, and that is a result of our financial assets impairment we also discussed with the third quarter results. The close to 20% EBITDA growth, drop unfortunately, translates to lower cash generated from operations. Those cash flows reached 6.3 billion Polish zloty, and is similar to investment outlays, a record high number as we kicked off our strategic CapEx projects in Opole and Turów. With significant CapEx and 2013 dividend payout last year, our cash balance dropped by 2 billion. We are still in net cash position as of end year, confirming our exceptionally strong balance sheet performance and financial standing following our CapEx plans in the next years. Our generation output was flat in Q4 with 14.4 terawatt-hours produced and 4% down for full year, reaching 54.8 terawatt-hours. This drop is a consequence of actions taken both in 2013 and 2014 to restore and refurbish our conventional asset base. Full-year lignite output was down by 6% due to unit shutdown in Turów and higher duration of modernization works. We will also see more details in the next slide, in the slide coming after. Hard coal-fired plants produced 12 terawatt-hours annual, 22% of the total group output, with a solid Q4 performance where we noted a growth of 4%. With gas cogeneration reintroduced last year, our gas output reached more than 1 terawatt-hour, up by 5% compared to last year, with majority of volumes produced in the fourth quarter by our Rzeszów CHP. Hydropower output came to 0.4 terawatt-hour, a double-digit decline versus last year, adversely affected by the weather and hydro conditions in Poland. Biomass economics was favorable. We increased that fuel usage and drove to 22% growth year over year. Wind production was up by half, and that is a result of acquisition growth, as Marek was already mentioning, and also our Wojciechowo farm kick-off last year in February. As seen with output volumes, we have had a very busy year. 2014 was especially heavy with modernizations of our lignite and hard coal plants that impacted availability of our fleet. The outage duration was 13.5% longer on lignite assets and almost 10% longer on our hard coal assets. Availability of CHPs and wind farms was remarkably high. Our continued focus on distribution grid performance is paying off. We noted very solid improvements in operating performance of our distribution business line. Network losses for 2014 reached 6.32%, an all-time low. Outage time was down by 11% versus last year, and that also follows our strategic objective of halving these ID indicators by 2020. As discussed earlier, our 2014 reported EBITDA benefited from significant non-cash one-off transactions, namely adjustments to long-term contract compensations of more than 1.5 billion that we largely discussed for our half-year results, CO2 allowances granted for 2013, a reversal of provision that we performed in the second quarter of the year, that was offset with additional voluntary leave program, both accruals and costs already borne, of more than 400 million. That is a result of our continued effort to tighten the operating leverage in our business lines, and also costs related to assets impairments and provisions updates that both amount close to 500 million Polish zloty. When comparing our operating performance on a like-for-like basis, we note that there were two key, most important market developments that drove our results down. The wholesale electricity price drop, a drop noted of 14 zloty per megawatt hour, and exceptionally weak retail margins. These two contributed to the vast majority of the earnings decline. Lower output in conventional generation, as discussed, led to lower revenues, obviously, but we managed to offset that with lower variable cost, mainly lower usage of hard coal and also lower prices of hard coal were favorable in this case. Biomass profitability and new wind assets increased production volumes. Weather was tough throughout the year. That not only impacted our hydro generation of more than 50 million Polish zloty negative impact, but also our CHP's performance and revenues on heat sales. Widely discussed cogeneration support in the previous quarters that came at additional cost to our business of more than 130 million Polish zloty. Looking at performance of our major segments, only distribution came with organic growth year on year. Despite a significant drop in return rate of assets, we managed to offset that with higher investments outlays that immediately contribute to return on assets and also increased volumes of distribution. Our largest business line, conventional generation, delivered half of the group EBITDA. However, lower prices and volumes both drove the results down, delivering 18% of drop on a recurring basis. Renewables performance was pressed by unfavorable weather, driving hydro generation contribution down, and as such, all segments' earnings dropped. Wholesale and supply saw a 1 billion EBITDA drop as we suffered extremely weak margins, low electricity prices, and also bore higher costs of renewables and cogeneration support regimes. CapEx in 2014 came at a record high, exceeding 6.3 billion Polish zloty. 2/3 of our CapEx was devoted to modernization of generation and distribution assets, a consistent picture compared to operating results we just discussed. Renewable energies took 6% of the investment pie. Opole project starts consuming more cash, and we already spent in 2014 more than 700 million zloty, and that CapEx was booked to the project. 23%, roughly 23% of the group investment was allocated to our regulated activities, namely distribution, both modernizations and development of the grid. Preparing a strong financial structure of the group was another focus in 2014. Despite having a pretty comfortable position on our balance sheet, we used that time to prepare the group for future needs. Apart from already communicated projects such as tax group and the EMTN program, our key recent undertaking was introduction of cash pooling structures. As of January this year, all group companies' standalone accounts are consolidated as of end of business day, and now the headquarter is managing the funds and the headquarter is managing that operating cash, as cash is no longer returned to the standalone accounts of the group companies. That is a key milestone, as we believe, for better and more efficient cash management in the future, utilizing the group's potential and utilizing our resources. In December last year, we also concluded a long-term financing facility with BGK. That is 1 billion of a long-term loan facility. In 2014, the group faced unprecedented challenges in the energy market and with competitive environment. We see 2015 in upward trend. Higher electricity prices, we see that being 8 to 10 Polish zloty per megawatt hour higher on wholesale. That will support earnings on both of our generation segments, conventional generation and renewables. We expect no major changes when it comes to volumes produced. Efficiency is obviously key to our conventional generation bottom line, and we will strive to pressure operating costs in order to provide for flexibility and also support the bottom line and the earnings of the conventional generation business. Year over year, we are receiving less of CO2-free allowances that will impact the profitability of conventional generation business line. And renewables support changes when it comes to biomass That is our key uncertainty when it comes to biomass economics and also conventional generation business line earnings. Renewables and distribution, we expect both of these segments to remain flat next year. Distribution will need to face a lower return on assets, the already communicated return on assets being 95% of the usual return. We expect that to impact our earnings in the range of 2%. However, we will strive to compensate for that with both volumes, investments, and also efficiency improvements next year. When it comes to wholesale and supply business, obviously the key focus will be improving margins and working on profitability of the business. 2015 will be our peak year when it comes to CapEx needs. CapEx on our key strategic growth projects, Opole, Turów, and Gorzów, will be in the highs next year. We will also continue our modernization projects, mainly in our Turów plant, and CapEx is expected to be significantly higher than this year. That concludes my presentations. Thank you all for your attention. I suggest we move to the Q&A session.
Yes, the floor is yours now. I will give the voice to the analysts gathered here in the room. For the sake of comfort of us, please do ask no more than 2 questions at a time. Of course, follow-ups are possible. We'll hand over the mic here, and the audience that is viewing us on the webcast can ask questions through email.
Thank you, Michał Kuzelinski from PGE Wyniki. My first question is on the wholesale power price realized in the fourth quarter. There was a 2 zloty per megawatt hour drop. What was the reason, please?
I think that one of the critical elements that you are asking was the discussion about the future budget, the budget of operational capacity reserve mechanism for the current year, for the year 2015. As always, the tariffication period lands at the last part of the year, that is November, December, and there was a discussion between the PSE, between, of course, our generation segment and the regulator on how large the budget for ORM, operational capacity reserve, should be for the existing year. And I think that the market expected that this budget is to be significantly lower than it was granted for the year 2014. The reality is that the approved budget is a bit higher than the budget that was approved for the year 2014, but indeed lower than the executed budget by the PSE. But the rule has changed, and market has expected that the regulation, the final regulation, the final budget might have a probably negative effect on wholesale price formation. So I think that this besides the other elements like power, the demand and supply, the regular elements, okay, that have influence on the price formation. This one was, let's say, a new one or additional one, but important case. So market has waited what will be the final decision of the regulator.
Thank you. My second question is on the operating efficiency program. If you could provide us with an update, how much of costs and revenue efficiencies have been accrued to date in 2014? How much was at the start of the year? What's still the plan? If you could provide some numbers on this.
We took significant measures in 2014 to provide for efficiencies, but those will start to pay off more in the coming years. which is mainly the voluntary leave program in the conventional generation business line. There were two programs, one at the beginning of the year that will be paying off with the amount of roughly 200 million Polish zloty, and the other one at the end of the year that is a large company-wide efficiency improvement program, and accruals for the voluntary leave is accrued or is booked in all of the business lines. We will be seeing those results starting from 2015 and onwards.
So what was the net effect? So the efficiencies less the redundancy provisions in 2014, could you quantify that? And what would be your expected outcome in 2015?
We keep our efficiency improvement target according to our strategy that quantifies the efficiency improvements post-2016 of 1.5 billion Polish zloty compared to 2012. However, when looking at 2014, the total additional cost relating to voluntary leave programs is 400 million Polish zloty, while the improvements realized from the first voluntary leave program is roughly 200 million Polish zloty.
Okay, thank you. So that was minus 200 negative in 2014, right?
That is rather difficult to measure in a very specific way, because on the other hand, we also have improvements resulting from the efficiency of our assets. That is also ongoing. And we included in the presentation very specific measures in the appendix slides of improvements in efficiencies of our Bełchatów assets modernizations that we discussed today. So I suggest we provide some more details on the quantifications and expectations in a discussion with the IR team post the presentation.
Okay, thank you. Just one more question. What is your likely involvement in the restructuring plan for KW? How do you see your role in the process?
I expected that question. So as a board, we are analyzing, let's say, different scenarios of our involvement, but I can assure you that we will accept the only such a scenario if eventually any that creates a value, economic value of the company for the shareholders. No other possibilities are taken into consideration. But we are observing carefully what's happening with the coal mining sector in Poland. As you know, we are contracting 100% of our portfolio of the hard coal comes from the Polish producers. And this is a significant volume if you compare that with the import volume capacity of Poland in terms of the so-called energy coal. Okay? Because we are consuming 6 to 7 million tons a year of the hard coal today. Plus, in the future, when we finalize the new Opole, another 2 million of the hard coal fuel. When we estimate that importing capacities of Poland in terms of energy coal, not the total coal, hard coal, but energy coal, is something between 6 to 8 million of tons. And we have to, from the business perspective, we have to look at the situation and development of the situation of the Polish hard coal mining sector. But any potential scenario, if any, we'll have to, create. We have to have a logic from our business perspective at first. It has a business. It has to have a business sense. Okay? And secondly, of course, it has to create the economic value of our company for the shareholders. This is everything what I can tell you today.
And just what's the timetable?
There's no timetable. There's no timetable.
But for KW, or the process of KW Nova set up is supposed to be completed by September.
Yeah, but this is the timetable for KW. Okay. You're asking the CEO of the PGE, not the CEO of the KW.
Okay, thank you. Just a very final question. if you could share your thoughts on the likely repercussions from the government sector consolidation plan. Again, what's the expected timing, and anything you can share in terms of your thinking on this would be highly appreciated.
We are not in the position to comment the analysis that I run out not by a company but the leading shareholder of not only PGE but any large energy company. I mean the state treasurer, and till the final outcome of this analysis is not known, we are not in a position to comment on it. But this will be not a surprise for you that size does matter on the energy market, and the bigger can more. But from the different potential scenarios of new architecture of Polish energy market, we believe that the most economic, from the angle of economic value for the shareholders, the scenario PGE with Energa is the optimum one. But this is just our opinion as a board. We'll have to wait for the final outcome of analysis of the leading shareholder, and that's just my comment, just opinion. Not a surprise, I believe, for you, because you're commenting more on that than I, and I'm just repeating your comments. So we agree, in terms of the what are the estimates of the potential change of the architecture of the Polish energy market. That's what I can say.
Okay, maybe we can go back for a moment to our internet viewers. We have a question from Igor Kuzmin from Morgan Stanley on a dividend proposal. When is it expected to be announced?
It is expected to be announced. So far, we only promised. What we are telling you today, that yes, we will stick to our dividend policy. We haven't made, as a board, the decision on a concrete number yet, but the message that we're sending to the market, to you, to the shareholders today, is that we will pay the dividend at least at the level of 40% of the consolidated net profit. At least, but it doesn't mean that this figure will be the final decision of the board before the general meeting of the shareholders. We have still some time, because we expect it, as usually as every year, that the meeting of the shareholders is to be held somewhere in the May, maybe in June, sorry, and so we have still some spare time to make such a concrete decision. But I promise today is quite clear: we will pay the dividend according to our policy dividend. That's just for your notice. We are publishing the yearly results this year sooner than this company has did it during the, let's say, preceding years. And you should notice that we communicated with the market, with the investors sooner, as it should be, in my opinion, done by the companies of the size like PGE.
We have also a follow-up from Igor on the comments on the potential mergers. Would that change dividend policy if such scenario would realize of consolidation in utilities?
Well, that's just my opinion, but we believe that the policy, from the beginning of our presence as members of the board of this company, we are declaring to continue what we promised, what the company has promised to the investors. So we believe that stable dividend policy, predictable dividend policy is a value, and this is my opinion, that has not changed, and I'm not going to change this opinion in any form of the market architecture and in any form of the leading shareholder decisions.
Okay, we're giving the voice to the audience here in the room. Do you potentially have some more questions, or the statements were comprehensive enough already.
We also changed the style of our new financial statement, which we believe that it's more clear for you to read. So I assume there is no questions. That everything can be read from the financial statement documents. That doesn't mean that I'm just closing my mouth and not expecting any questions from you.
We are definitely open for your questions.
Okay, I think we'll wrap it up since there are no more questions in the room. Thank you very much. Thank you very much for coming. Thank you for your attendance, and see you in May for the Q1 results.